theme of the program.
Yeah,
President sir, can I just give the introduction and also theme of the session?
yeah. Good evening, everybody. It's my pleasure to welcome you all to our evaluation series seminar. The whole intention of this was a lot of our members who are registered with not a CA Institute, any other RVO, they actually wanted to get a glimpse of the new amendments. With that intention, we have uh, conceived this program and brought it out. Thanks to Chandrasekhar sir for coordinating and bringing out the flow and talking to all the speakers. This will be 2+1 session. Tomorrow's session will be with Gopal Krishna Raju sir, and finally we'll have for SFA and plant termination and land and building separately.
Yes, sir.
So as you know, this on 25th of January, IVS came out with a new amendment and which we all need to follow. With that agenda, the applicability of IVS going forward is what we are looking forward to in this session. And all class of assets are participating in this, which is kind of usually we do in Bangalore for only in BWA only for SFA, but this session is for all the category of people, all the class of people. So with this, I give back the podium to Chandrasekhar sir to introduce the speaker.
Yeah. Thank you, sir. Good evening to everybody, and this is my privilege to introduce the Dr. Ajay Garg, sir. Dr. Ajay Garg is a 360-degree professional, effective speaker, technical author, writer, and social entrepreneur with a total corporate experience of more than 38 years. Mentorship on Startup India portal. Qualifications are like this. He's an MA Economics, MCOM, MBA, LLB, FCS, FICA, IBB Research Valuer, IP Attorney, Qualified IP, QID, QSA, PhD, Expert speaker. Sir, his qualifications are 2 lines. Sir. So in conferences and super institutes like ICSI, he's done 241 lectures, ICI 150 lectures, IICA Indian Institute of Corporate Affairs 12 lectures, AJN IFM 82 lectures, private education institution 154, other public institution 150, 120. So he has done more than centuries in all the institutes. He served as a director on the board of a corporation bank from 2008 to 2011 for a period of 3 years. He is a honorary secretary general of NOMI, NORMI, National Urdu Research and Management Institute for the year 2023 and 24 and 24-25. His latest multi-author initiative www.examonlinemcq.com is getting a love and affection from all the across the country. So he has authored 5 books. They are financial inclusion, viable opportunities in urban India 2011, 2012 corporate laws. Third one, CA professional and SME in Make in India handbook for practitioners 2015, published by ICAI. Come on, start up the business 2021. Last book was Social Auditor Examination MCQ 2023. So he has been to USA, South Africa, Kenya, Bangladesh, Singapore, and Malaysia. So this is about Ajay Garg. In fact, Ajay Garg sir is a regular speaker at ICSI RVO. Yeah. Yes, sir. So I request Speaker Sir Ajay Garg sir to take it forward. Thank you, sir.
Thank you, Chandrasekhar. And this is fantastic initiative by Bangalore Valuer Association. And Bangalore Valuer Association has always taken the lead for various programs at upper level. And this series is also will be remembered for pretty long time. And I think other RVOs will also take leaf from these sessions and they will also try to make their members aware. Congratulations to Bangalore Valuer Association under the able leadership of the president, who is himself present here for today's session. Thank you, sir. Thank you for being present. And Chandrasekhar ji, usually people read 2-3 lines from the biodata, but but
Yes, sir.
you have read more than more than what is written over there. Thanks for that.
Yes, sir.
Perhaps this will rub the shoulders of the youngsters who are joining, that they can also attain the heights in their profession if they will be devoted to the work, whatever is there on the table. That is usually the purpose why the resumes must be biodatas, profiles must be read, so that at least someone gets motivation for that. And
Yes.
and here I shall tell you, Chandrasekharji, that my seventh book
Yes,
now
sir.
will get released in 2025. I
Oh,
have by this date written six books, and
yes, sir.
seventh is due in 2025.
Oh,
The
good, sir.
work
Thank you.
work has initially started, and this will be for elders.
Yes, sir.
All the other books were for youngsters, but this book particularly will be for elders. So then I will I will gift a copy to Ravindranath ji also
Thank
for
Yes.
you.
the seventh. So then I will give first out of first 10 copies to Ravindranath ji, so that he can enjoy the life at this stage like me. Well, the story session must start with a story, because stories gives us the practical wisdom. And here is this story which is regarding the woodcutter and his blunt axe. Earlier you might have gone for, just give me 1 minute. Yes. Earlier you might have read the story that yes, the woodcutter, his axe became unsharp and then he was asked to sharp. But sometimes what happens, that you need to buy a new axe, so that you are in the leadership mode. And this leadership always requires that you must be ahead of co-professionals. For example, this IVS 2025 came in January 2024. It was finalized 1 year before, 31st January
I got
2024.
so
Yes, anything? Then I was just telling that this basically this story relates to that sometimes you need to sharpen and sometimes you need to buy another one. I was talking about that the effective date for international valuation standards may be 31st January 2025. But when they were finalized on January 31st, 2024. Means full 365 days were given to the valuers, that they can update their knowledge bank, so that when they submit their reports, when they sign their reports after January 31st, 2025, their reports are as per the IVS standards 2025. But before I talk about that, there is another thing, that if you are member of ICAI RVO, Institute of Chartered Accountants of India's RVO, then for you this IVS 2025 may not be very relevant. Reason being that ICAI RVO has issued its own valuation standards. As far as other RVOs are concerned, their own valuation standards are not there. So then you need to follow IVS standards 2025 for every report which has been signed after January 31st, 2025. Means, first thing, that if you have not signed any report till date after 31st January 2025, then you are lucky. If you have filed, then at least the cosmetic things, I am confident that you must have inserted in your report. And we will talk about what has changed, what has not changed, what has changed substantially, what has changed only cosmetically. All these four aspects we will discuss in today's session. And in the meantime, from time to time, I will be inviting my colleagues who are joining this program for not only for their questions, but also for their comments. Well, when we talk about IVS 2025,
Sir,
the key aspects.
I've got one question here.
Yes.
Again, what are you clarified to whom it is applicable and to whom it is not applicable?
Yes, sir.
I had this question. I'm a CA by qualification
Yeah.
and practicing, and when registering with IVO, I have registered with IIV RVO.
Okay.
So, which is the standard applicable to us? CA Institute has clarified that I, being a premise chartered accountant, practice
Yeah.
should be following irrespective of RVOs. I'm registered with. I need to follow ICI initiated standards, valuation standards.
No, sir. Because you are registered with some other RVO, therefore IVS 2025 is applicable to you, sir.
Okay. Thank you, sir.
To you.
Sir, there is a question, sir.
Yes. Harshit ji.
Sir, you want to say,
Sandeep ji.
yeah, I want to say, sir, if I registered with the ICI RVO, then we don't need to follow this international valuation standard.
This is my impression, boss. Because Institute of Chartered Accountants RVO has issued its own valuation standards. Though they
Okay.
are the copy paste of not many changes are there. I shall not say copy paste, but they are India centric valuation standards which have been adopted by Institute of Chartered Accountants RVO. So therefore, in that case, if you are member of ICAI RVO, then you need to follow the valuation standards prescribed by that RVO. And if RVO has not prescribed the valuation standards, then you need to follow IVS 2025 in most of the cases. But when you follow these IVS, whatever, then you need to take care of, because IVS itself says that wherever regulator, wherever statutory, wherever other requirements talks and there are deviations from IVS, then those deviations shall be followed, but these must be reported in valuation report.
Okay. Sir, one more thing.
Yes.
In the report, whenever we mention in the report, as a ICI, we have to each time mention कि we are following both this standard or only ICI standard. Because the number of times there is a confusion. Some professional write I am following ICI, RVO, and international. So
Yeah.
whether we should have to mention that we are following both the standard or ICI standard only.
Whenever in confusion, go to company registered valuer and valuation rules again and revisit them. When you will revisit, then you will realize that when the valuation standards are adopted by any RVO, then you need to follow the RVO valuation standards prescribed.
Okay, sir. Okay.
Now there may be some situations, say some joint venture company is there, and suppose you are doing the valuation for company which is 100% owned by the Korea, and Koreans want you to follow IVS standards. Then you need to follow IVS standards, forgetting the standards which are prescribed by your RVO. It depends on, sometimes it depends on what is the requirement of the client.
Okay, sir.
Otherwise, if you are member of Institute of Chartered Accountants RVO, then their valuation standards are there in place, and kindly check with them. They shall also be in process of revising their valuation standards, and you need to follow them if you are member over there. Otherwise, these IVS broadly.
Okay. Okay, sir. Thank you.
Thank you. Okay, now sharing again. I will be taking off the PPT from time to time so that the discussions are good. Now let us see what are the key aspects to be noted. So then, Sandeep ji, when we talk about key aspects, the definitions have different name in IVS. They go with the name glossary. So whenever say glossary or whenever any confusion is there about the definitions, then this glossary is to be reported, is to be referred. General standards apply to all SFA, land and building, and plant and machinery, all three asset class. General standards apply to all. That means that that if earlier you were reporting in IVS that there are 5 general standards and you have followed 101, 102, 103, 104, 105. So now you need to mention that now you have followed the IVS 2025 general standards which have increased from 5 to 7, and business valuation standards and asset standards. Basically, these two can be put together and can be called specific asset standards. Specific asset, for example, for plant and machinery, there is one standard. For properties, land and building, there are two standards. As far as SFA category is concerned, there are 5 standards. And then appendices. Appendices, there are 5 appendices in nutshell now in IVS 2025. And one of the appendices talks about ESG considerations. Because one of the appendices talks about ESG considerations, so therefore we need to take care of these also. Means first of all definitions, second is general standards, third you can say specific business standards, which I have subdivided into 2 parts, and then appendix. And these appendices are attached to 3 of the general standards out of 7. Now see, when we talk about the general standards, let us see what has changed. Here you can see what were the general standards before 31st January 2025. Before 31st January 2025, there were 5 general standards: scope of work, investigation and compliance, reporting, base of value, valuation approaches and methods. Now what has changed? If you will see the right side, then you will realize that instead of 5, now the general standards have increased to 7. But this series, interestingly, is not starting with IVS 101, but now the series is starting with IVS 100 and ending on IVS 106. Means there is a probability that when you will be preparing the report onward, there may be a possibility. Take take note carefully that 101 to 107 is not there. 107 is not there, but instead 7 standards starts from IVS 100. And these are general standards and these are to be mentioned in every valuation report whenever you are signing the valuation reports, where you need to mention which IVS you have followed. That means IVS 2025, whether you have followed IVS 2025 or you have followed any earlier IVS. And then you need to mention that these general standards have been followed 7. And now this 7 also, interestingly, you will find that one of the general standard, investigation and compliance, that has lost its relevance. And then IVS 105, the methods are not there in the new general standards. Means 3.5 general standards out of 5 have survived and 3.5 new general standards have been inserted. Means out of 7, 3.5 older one continues and 3.5 new one have creeped in. When there will be a session tomorrow regarding the general standards, be careful. Careful from the point of view of what is changing in your report. Means the finished document. Finished document is more important than what is changing in your finished document, that you need to see, and whether any heading getting added, whether any subheading getting added, whether the reporting you need to mention IVS 2025, answer is yes. Whether you need to mention all these 7 general standards, answer is yes, because these are mandatory. Even if you belong to land and building asset class, still you need to mention not 5 but 7 general standards. Anyway, let us talk something more. See, in last 3-4 years, everybody has talked about ESG, and there were multiple things about the insertion of ESG in the valuation reports also, because it is important for long-term survival of the companies. And it is very important, if company will survive, only then we can take the valuations for the running businesses as we take. Now, how ESG is creeping in? Because you will not find that the name ESG is not there even in these 7 valuation standards. Valuation framework, scope of work, basis of value, valuation approach, data and inputs, valuation model, documentation and reporting. ESG is still missing. If ESG is still missing, where it has gone? This has basically emerged as appendix to GS4. What is GS? GS is general standards, and that is data and inputs. In data and inputs, this has been made appendix, and IVS says that following appendix is also mandatory, not recommendatory, but mandatory. Means
Sir,
one thing is
sir, there is one question. Can I read out,
yes,
sir?
yes.
Question
Read
from
it.
Rajiv Dingra.
Yes.
Sir, in case of valuation date is on or prior to 31/12/2024, valuation date is prior to 31st of December. It may be 30th November, 31st December. But the report date is 1st March 2025 or any other date after 1st January. Do we have to follow IVS 2025 or earlier version?
Answer is yes, because your report, date of report is important for following the IVS 2022 or IVS 2025, date of reporting, date
Okay.
of reporting.
Yes, sir.
And date of reporting, date is instead I can say date of signing of valuation report. Then
Okay.
I'm writing in chat box for the purpose of for Mr. Dhingra that yes, date of signing of report, valuation report is important. If it is being signed after 31st January 2025, then actually we need to mention that we have followed IVS 2025 and we need to follow also.
Sir, then I think very important question for all our members other than
Yes,
ICI members, sir. This is the
yes,
time that most of the things since latest quarter is 31st December. So most of the reports will be signed now.
yes,
Very few are after 31st January. Report signed after 31st December. We need to okay signed after 31st January. Even though report
yes,
prior to that, I think we need
yes,
to look
yes.
at it.
Date
Thank
of
got it.
valuation, date of valuation. See, two things are there. Date
Mhm.
of valuation and date of signing. Date of valuation may be earlier, but when you are signing your report after 31st January, then as per IVS directions, it is mandatory to follow IVS 2025.
Yes. Thank you. Thank you, sir.
Well, we were talking about ESG considerations. Means now what is happening because this appendix is mandatory. Therefore, every report, when you are preparing your next report, do remember that one of the headings in your report must be ESG considerations. Because following the appendix is also mandatory. Therefore, this shall be added as a heading if you are not the member of ICI RVO. If you are member of ICI RVO, then check whether ICI RVO has also revised its valuation standards or is still in process of revising. Now, let us talk about standards with no significant changes. Significant means there may be some minor changes, but significant changes are not there in these standards, which are asset specific standard. For example, IVS 200, IVS 210, that is related to intangible assets. IVS 220, that is related to non-financial liabilities. And IVS 230, which is related to inventory. In these four standards, there are no substantial changes. But if there are no substantial changes, where the changes have happened? But before that, let us talk about appendices. So then, Chandrasekharji, there are total 5 appendices now.
Yes, sir.
Defined basis of value, other basis of value, and premise of value. These three
Uh,
are becoming
sir,
appendices to,
sir, one submission.
yes,
As President said in the initial, we have tomorrow session from GKR general standards. Afterwards, yoga specific standards.
yes.
So leaving those depth they will be discussing. So I think overall
Yeah,
and
yeah, I will not
yeah,
be
no, just
taking anything to depth.
yes,
I
sir.
am just taking the overview And in overview, I am just focusing with single slide on appendices because
Yes,
these appendices need to be followed, and following appendices is mandatory.
yes,
So
sir.
therefore, and what are the names of the appendices? I am just following that and
Yes,
will
sir.
be taking care of only the names.
Yes,
Now
sir.
see, IVS 102, three appendices are there: defined basis of value, other basis of value, and premise of value. IVS 103, there is one appendix which goes with the name valuation methods. And IVS 4, all important ESG considerations, because these ESG considerations to be taken care of.
Sir, I have a question.
Now, let us talk about.
So somebody says there is some question. I think
Ramurthy ji, please ask your question.
ESG considerations apply only for certain companies under the Companies Act. Means it is now applicable for the top 500 companies, I think, listed on the NSE. So why are we to apply ESG considerations for non-applicable companies also?
See, if you are doing the valuation, I will say yes. And then if you wish to ask how to do it, then I have a suggestion how to do it, because company may not have the detailed ESG report. If company does not have detailed ESG report, what data can be collected from the company, that can be deliberated and that can be discussed. And maybe that BVA would like to have some other session that to discuss what is required. But in brief, I am ready to tell Sir Ramurthy sir, if Chandrasekhar ji will say, then I will tell in brief how this can be taken care of.
sir, actually, even my question also, assuming that I
Yes,
am doing a valuation report of a big company,
right.
2000 crore, then for
Yes,
them ESG mandatory, then I may ask some information. I may report about the company complied or not complied. I
yes,
am a small private limited company having say 5 crores turnover. For them ESG
yes,
not applicable. In both the cases, we want to know option one, is it mandatory or not? If so, how to provide? And if you can just deliberate, it may be better, sir.
yes, perfect. Now see, ESG itself, all three alphabets explains what is required to be compliant. When
Yes,
we
sir.
talk about the governance, then what is the habit of the company about the governance? It is easy for any professional to understand by way of asking for the delays in the payments of the stress dues, delays in the payment, delays in the filing of the base other returns. And once you know the habit of the company, then on the scale of 10, you can assess whether company is compliant on this G or not. If it is compliant, partly compliant, then what should be the scale? That is your prerogative. You can decide. Now let us talk about the social. The social aspect can be taken care of by way of understanding the various stakeholders. And if you just understand whether they are fair to their vendors or their customers, or greenwashing is going on, that way you can understand whether S is in compliant or not. As far as E is concerned, Government of India has subdivided the E into three categories: green, orange, and red. If it is red, then Pollution Control Board consent to operate and consent to establish both are required, and every year the renewal of this certificate is there. If this is green or orange, then the state pollution control boards compliance is required. So then that way, if say company is not preparing ESG report, you don't have any source, then how to do it? Then there is always a management explanation letter. And because first of all, we need to comply, we need to see how we can reach to the finish line. To reach to the finish line, if you don't have any data, then always rely on declarations and ask for declarations, suitable declarations in management explanation letter, which may be named differently by different professionals, but that will come to your rescue whenever company is not required to do the ESG compliances. And Rajeshwar Rao ji, I can see you there. And Rajeshwar ji, how presently we are doing it, you can pitch in and you can tell your experience about this.
Sir, it is, I face problem with one client. There is like turnover is almost 1,500 or 1,600 crores of turnover, having plants in Andhra, Gujarat, and Maharashtra. I
Yes.
asked for the ESG compliance report. They were not coming forward for giving. Then I Googled it and placed a 2021 report into their email saying that, see, this report is available with you. Updated report is available. You have to share. Then we
Yes.
had a meeting with them. They connected me to that company is having specifically ESG, connected me to that ESG manager, and now we are progressing on that. We need to little bit take a tough stand to get the information. As Chandrasekhar was mentioning,
Yes.
small clients we can accommodate, but big clients, this kind of clients, we need to be as a professionals, we need to take the information, prepare a proper ESG content in the valuation report. It cannot be a story.
Yeah.
Sir, I think for both Rajashram and Ajay, maybe for the benefit of other member, now ESG were not master. There are two situations. Company complied with the ESG report. There is a report is there. Other report, company we don't know whether applicable or not applicable, but there is no ESG compliance in the annual report. Wherever a company is complied, can we say that company has got ESG process in place, it is complied? Where a company is
No,
not
sir.
complied, yes, sir. Where a company is not compliant, we will say that a company doesn't have a ESG mechanism. One will say,
See,
yes, sir.
yes, yes. Chandrasekhar ji, complete, yes.
So that's what I'm saying. I'm saying what is our role. If the report is there, we'll mention. If report is not there, we'll say not mentioned. Accordingly, in the considering CSRP, the company specific risk premium and other factors, we do have to consider accordingly it's the appropriate valuation. Is that okay? Or what is our role?
Yes.
Chandrasekhar, sir,
Yes,
I'll
yes,
talk.
Rajeshwar ji, you talk in brief and then I will also further add, yes. How we are doing it, I will share.
Chandrasekhar, ESG, whatever we are doing, we are basically commenting on sustainability of the company in long run. Though it says ESG, like environment, social governance, sustainability of the company, we need to consider whether it will sustain in long run. So when you are saying that they're not reporting, they're not giving the information, if it is like manufacturing setup or some which is having environmental issue as well as societal issues, if they're not coming forward and they're not reporting, you may have to increase, as you said, CSRPR, you have to increase in the some factor, you have to factoring into value at the equity value. Otherwise,
Okay.
just writing they have not provided may not sufficient.
Yes, sir.
Yes. So, Rajeshwar ji has beautifully mentioned it, boss. That see that discount factor. We have read certain discount factors, if you remember. And one of the discount factor which nowadays we have started using, that is ESG discount factor. And see, there may be situations where part compliance is there. There may be situations where majorly compliance is there. There may be situation where minor faults are there. There may be a situation. Number one thing, that first of all, we have to save our skin as a valuer, because section 247 has penalty mechanism. So therefore, number one thing, that professional skepticism, this has now entered into the definition. This negative word has entered into the definition we will discuss today. So that way, what will happen, you will see that yes, professionally you have to be that yes, you need to doubt. Number one thing. Number two thing, that ESG, environment, social and governance. So then you know that yes, governance, we all professionals, we know S also and E is also not a big science. So then what can happen, that we have started factoring the discount factor also in our reports if ESG data is not coming, or if management is not comfortable even mentioning that they are broadly complying ESG in their management explanation letter. If they will not, then yes, discount factor has to come. Technically speaking, that this discount factor will take care of, as Rajeshwarji told, that see, just mentioning that company is non-compliant on ESG will not work. You need to factor it in your valuation, which you are arriving at.
Thank you, sir. Thank you, sir.
Thank you.
Sir, one question, sir.
Yes.
Sir, regarding in practically, so while see, most of the cases, what we are doing is not running units, okay, in plant and machinery. Okay. So most of the cases we are dealing with or we are doing the valuation is of NPA accounts. So there will not be any response or no management role will be there. So it will be in bank's hands, which they will not respond or they will not have any document regarding ESG. Then in that case, how to mention in the report and how to consider?
Yes, Pamarthi ji,
Yes,
see, you are from plant and machinery,
yes, sir.
rare professionals. So number one thing that many of my colleagues will be looking for your services whenever they need it.
Okay.
Number two, you are talking
Welcome,
about,
sir. Welcome,
yeah,
sir.
yeah, share your number here. Then
Yes.
I'm very confident that every month one new person will connect with you.
Okay.
Number two, Pamarthi ji, see that general standards are mandatory for all classes. Means and appendices are also mandatory for all classes. Now, for NPA accounts, because there can be two types of valuations, one for running business and another one, the business which has stopped. You are talking about the business which has stopped. There you need to report, and particularly for plant and machinery, you usually are following the Habu and and other methods. Habu and other methods. So in those methods, but ESG consideration as a heading, you need to build in your report, and you need to mention that you did not get any data from the management and you are presuming that company is not fully compliant with ESG consideration. This is how my colleagues who are working under plant and machinery, they are doing it right now.
So normally, sir, actually, these people, bankers, may not provide most of the information. They may have, but they are
Yes.
reluctant to take out the documents and share to the valuer. This is
Yeah, you
what
are right,
happening.
boss. Yeah.
So that's what happening. So in that
Yes.
case, so I don't expect this ESG's complaints is made by this party or bank. In that case, when it is the file is in the name of bank, in the hands of bank, nobody will respond and nobody will take care of about ESG in that situation.
Yes. See, in such situations, Pamarthi ji, you need to mention in your report that ESG data was neither available nor provided to you either by the subject entity or your client entity.
Okay. Yeah, this will be the correct answer.
Well,
Right.
let us talk about IVS 500 SFA. This has been substantially rewritten. Therefore, I will advise that third day will be very important for this BVA program. Don't forget to be attentive on third day because IVS 500 has been substantially rewritten. This may give tension to my colleagues who are in SFA category. Now see, definitions. Definitions earlier they were numbered as 20.01 to 20.33. Means there were total 33 definitions. Now what is happening? That definitions have not only got the increased or changed, but even numbers have changed. Earlier 20.01 to 20.33, now 10.01 to 10.41. Number of deletions, how many definitions could not survive the changing times? 10. How many new definitions have been added? Boss, 18 new definitions have been added. And number of revised definitions, 17. And no change, only 6 definitions have survived the time test of time. Out of 33, only 6 definitions have survived without any change. Means 17 have been revised, 18 have been added, 10 have been deleted. Yes. Now let us see some of the definitions and continue to raise your questions whenever the question is there. Continue to raise it. First of all, see this definition automated valuation model because you may remember that in last 2-3 years, you are regularly getting emails, WhatsApp messages that now arriving at the valuation is becoming easy because you can use this software, that software, and blah blah. And particularly for land and building, multiple softwares are available in the market. Now read this definition in light of that background where you are getting the informations about the various softwares and you are getting the informations about the models which are available and can be applied by the valuers. A type of model that provides an automated calculation for a specified asset at a specified date using an algorithm or other calculation techniques without the valuer applying professional judgment over the model, including assessing our inputs and reviewing outputs. So that way, what is happening that these softwares now have creeped in the definitions and they have been given the name automated valuation model. Well, let us go to another important addition which has happened, that is data. Quantitative and qualitative information which is available to the valuer, that is now entering as a definition about the data, because it was a question whether only quantitative information is data or qualitative can also become the data. So now it has been defined, rather I shall say that a separate general standard is dedicated to data and inputs, because inputs are very important for any output. Therefore, now they are getting prime importance in international valuation standards. Let us talk about, again, let us talk about ESG, much talked, where IVS also came out with one of the questionnaire about this ESG. They collected the information from all across the world. Discussions went on since 2021. And after that, they did not enter these ESG in IVS 2022 and they kept it pending so that authentic information is entered. And now what is happening, that now this ESG has entered into IVS 2025. Not only in the definition, but it has entered as a full appendix, full-fledged appendix under IVS 104. The criteria that together establish the framework for assessing the impact of sustainability and ethical practices. Now see, as I was talking about the greenwashing, I was talking about the fairness to the vendors as well as fairness to the customers. So then this fairness to the vendors and fairness to the customer is covered under basically under ethical practices. Financial performance or operations of the company. ESG comprises 3 pillars. So these 3 pillars have also been mentioned over there and collectively impact performance, wider markets and society. When tomorrow you will go through the appendices under general standards, at that time carefully take note of where you need to mention it. As per my understanding, number one thing, that always you need some explanation for this in management explanation letter, number one thing. Number two thing, in your reports, you need to make it as a separate heading. That is number two. And number three, if some backup data you can arrive at, then use that backup data. And number four, that always mention this as a separate discount factor, even if you are not mentioning any discount and you feel that company is fully compliant on ESG, but you mention discount for ESG. And this discount factor may be taken as 0, but mention this discount factor. And if company is partly complied, then because as of now, there are no advisories. After going through the appendices, then you can decide what discount factor you are going to take for slippages in ESG compliances. This is my understanding, that these 4 things you need to inbuilt in your reporting mechanism. Now let us talk about the inputs, because this input is also now getting highlighted with the way of General Standard 104. Data, assumptions and adjustments determined to be relevant and assessed or selected by the valuer. So now see, input is wider term. In addition to data, it includes assumptions as well as adjustments based upon professional judgment. And now see, observable data, information that is readily available to market participants about actual events or transactions that are used in determining the value of asset and or liability. For example, you may remember that whenever we do any valuation report, at least we go through the Google 2, 3, 4, 5 pages and we collect the data about the company as well as we collect some data about the industry. And if some report is available, then we use that report also. And this inspection and investigation has two subparts. Part one related to subject company and part two related to industry to which that company belongs to. And now here observable data, the data which is readily available cannot be ignored. And this is very interesting, this professional skepticism. This used to be a negative word, but now this is getting the positive meaning, this professional skepticism. It has been defined as an attitude that includes a questioning mind and critical assessment of valuation evidence. Just now, Rajeshwarji told that in one particular case where company was big enough, 1,600 crores turnover, and he was asking for the ESG was not coming. Then he made search, and ultimately he got one report which was 2021, and he asked the management that one report, this is available and I have got hand on it. Why you are not providing it? And then management was conducive and then they provided that yes, he is intelligent valuer and he cannot ignore his questions. Then his stature must have gotten to the higher standards when his client came to know that he has already got hand on earlier ESG report. This professional skepticism means questioning mind, means now it is coming out from the negative shadow and it is getting a positive meaning, that having a questioning mind is not negative. Now see full change. Earlier we were seeing some of the additions. Now let us go and let us see full changes. And in the meantime, continue to interrupt, continue to ask questions and even add the value. I will not say only questions, but even if you have any comment, continue to interrupt. Abraham Matthews, feel free to interrupt in between and add on the value. They see now asset. Now asset has got a new meaning. We will just after this we will see the old meaning also. So now right to an economic benefit, that is an asset. Now see this beautiful meaning, the new meaning which is coming for the asset, and earlier meaning, this definition has been fully changed. Means whatever was mentioned earlier has been deleted. This could not survive the test of time and a new definition is coming, right to an economic benefit. Anything where some milking is possible, that is an asset. Client. Now this partial revision is happening even in this definition of client. And I will advise you that read the second portion of this definition carefully, because my profession of registered valuer has only one side, and that side is practicing side of the profession, and employment side of valuation profession has yet to emerge. Now read this definition and you will get an idea what Ajay Garg is talking about. The person who engages the valuer for a given valuation. Clients may be internal, valuation performed for an employer, or external when a valuer is engaged by a third party. Now see, this is giving an indication that this profession is just at the verge of getting ready for another side of the profession development, and this is likely to happen in next 2-3 years, where the organizations which require the valuation reports on regular basis may be allowed, subject to multiple caveats, and this may happen in India also, because IVS has for the first time redefined the client, where it is mentioned that valuation performed for an employer means in times to come, though not instantly, but in times to come, the young entrant into the professions will also have full-time job opportunities in the field of valuer. Any comment here, Chandrasekhar ji?
Sir, that IBBA
JB
stipulates.
Rao sir, yes.
Sir, IBBA stipulates that the value should not be in employment.
Yes, yes, you are
Now,
right. Because see,
now,
I am saying, yeah.
this, I think by this definition, if we use IVS standards, definitely they have to allow the any employee to take the that internal valuation. It gives a
Mr.
scope
Rao,
for that.
yeah. Yes, yes, Mr. Rao, see, this is very interesting development and only one gate has opened. There may be few other gates also, still they are closed. And once all gates opens, only then this employment side of the valuation profession will emerge. And in India, yes, IBBI as a regulator, which is only as of now himself calls them as temporary regulator till the full-time regulator comes. But not only the regulator, even the section, even the rules, even the SEBI regulations, many changes have yet to happen and only then this will happen. But see, if I share my experience of boss INVIT, Infrastructure Investment Trust or REITs, then what you will find that the valuer is doing the valuations almost round the year, either for some asset or for some other asset, or the asset which is incoming or the asset which is outgoing, because outgoing and incoming of assets most of the time is between related parties. So therefore, today how it is happening? Today, how it is happening, if you will see, then you will find that Rao Saab, this is basically today also what is happening, that the valuers are doing it on retainership basis because they cannot join as an employee. So therefore, I see this as interesting development that this definition has been changed, and for the first time, this has been inserted that valuation performed for an employer means first gate has opened, other gates are still closed. Any other comment on this?
Thank you, sir. Thank you. Right.
Thank you, Rao sir. Thank you. Okay, well, next, let us go to next. That is use of accumulated knowledge and experience as well as critical reasoning to make an informed decision. Professional judgment. Professional judgment day in and day out, all of us follow. But now what is happening that this professional judgment is also getting the new meaning, new definition, use of accumulated knowledge, which we continue to accumulate through CPE, continuing professional education, by whatever name it is called, and experience. As Rajeshwarji shared the experience, as Mr. Rao shared the experience, as others have shared the experience, then what is going to happen that this experience will makes our journey more critical, and then this critical reasoning also happens, and on the basis of that we can take the informed decision. Anyway, let us talk about, this is repeat. Let us talk about specialist. This is also happening for the first time. This specialist has been redefined. Now see, an individual or group of individuals possessing technical skill, experience, knowledge required to perform or assist in the evaluation or review and challenge. A specialist can be internally employed or externally engaged. Now see how the path is changing. That specialist can also be internally employed with the valuer or can be externally engaged. Means specialist earlier definition is now under partial revision, and maybe a situation where you have one person with the background. For example, just now we were talking to Pamarthi Kusumaya ji, where he is from plant and machinery. Maybe that he has engaged one of the employee who is expert in the software industry, computer hardware industry, where Pamarthi ji may feel that he is a specialist for computer hardware. If he is a specialist in computer hardware, can he engage him as a specialist because he is still his employee? After 31st January 2025, it is possible, Pamarthi ji. Earlier, it was not possible. Any comment? Pamarthi ji, any fast comment?
No, no, sir. No, sir.
Okay. Now see the revision. Valuation risk. Risk that the resultant value is not appropriate for its intended use. That has been defined as the valuation risk. This definition has been revised. Now see here coming three very critical and important definitions. One is valuation process review.
So that
Now
risk
see.
needs explanation. And I didn't follow what that valuation risk was.
Yes, sir. This is valuation risk, sir. Ramurthy, sir, yes. Repeat, sir.
I didn't catch the meaning of this.
Okay. Now see, sir, the risk that resultant value is not appropriate for its intended use. That is the valuation risk. Say, let us understand this with the help of an example. That see, someone wants to invest the money. The resultant value is not appropriate for its intended use. The value which has been arrived is basically that is the value for which neither company is convinced nor the investor is convinced. If none of them is convinced, then this is a risk that this resultant value will not be appropriate for what was its intended use at the time of beginning of the assignment. Very important definitions. One is valuation process review. Valuation process. Here the word process is very important. And here the word review is also important. See, arriving at valuation is different and talking about the review is different. Review is usually taken by some other valuer, and valuer may be asked to take the review of the process of the valuation. If the review of the process of the valuation is required, then this is valuation process review. Here what happens? That reviewer will not review the opinion on the value. He will review only the process of the arriving at the valuation. Means value will not be touched by the reviewer, only the process will be touched by the reviewer. And this is another definition, valuation review. Here the valuation review is either valuation process review or value review or both. These three words will disturb you, will trouble you in times to come in 2025 and onward. One is valuation process review, another one is value review, and third one is valuation review. And here, this conclusion is not there, but this can be either for process or this can be for review, value review, or this can be both. Here comes value review. Here what will happen, that process may not be reviewed by the reviewer and he may review only the valuer's work in reference to the value which has been arrived. These three words, sir, value review, valuation review, and valuation process review. These three words are very interesting, and let us see some messages. Some messages I wish to take them, and then we will again talk this value review, value process review, and valuation review. N. Krishnanji says, can we have one example of non-compliance in ESG by the CD and the relevant penalty applied in value? Thanks. And CD means corporate in difficulty. Krishnanji?
Corporate data, sir.
Yes, yes. Corporate debtor, that means you are talking about IBBI. See, in
CRB.
IBBI, the ESG is always casualty, boss. Even governance is not there. When you will see, you will not find even the auditor reports and audited financials also. Then what to talk about the ESG in case of this? Because there you are not finding the value for the continuing business. Basically, you are finding the value on insolvency commencement date. So therefore, ESG will always be a casualty there. Here, Pamarthi ji has asked, please share your mobile number. And then Ram Krishna ji, what is the discount rate that is taken for non-submission of ESG compliance rate, sir? Today we are taking it 5% or 10%. But you can adopt the methodology as per your things. But this is how we are doing it, Ram Krishnan sir. We are doing it like this. And here I will invite other valuers also to pitch in. If they have applied some ESG discount factor, then they can mention how they have done it. And how we are arriving at partial compliance of ESG, we are doing it on a scale of 10. We are doing it on a scale of 10.
Sir, I have a doubt, sir, on behalf of for all the participants.
Yes.
Again, the ESG, I don't know. I think this series will come to know whether
Yes.
is it compliance of ESG is mandatory or not as per IVS 25 that we need to know. If it is
Mandatory.
mandatory. No,
Yes.
most of the cases, according to me, all unlisted only top except barring top 1,000, 2,000 companies not applicable. If not applicable, will there be any recommendation for a discount rate like lack of market DLOM will use between 15 to 30%. So can you suggest any some range within which we can use, sir?
Yes. See, ESG report is not applicable. For small company, you are right. But ESG governance तो sir हर एक के लिए चाहिए, even if it is individual, the governance is required, sir. And what is this governance? This is basically the compliance, nothing else. And then
Yes,
if you talk about the social, then see ministry MCA. But this MCA is very different. MCA has come out with greenwashing concept. Greenwashing.
yes, sir.
And this MCA is not Ministry of Corporate Affairs, but this MCA is Ministry of
Consumer Affairs.
Consumer Affairs. And they have come out with this concept of greenwashing because a lot of things were happening that companies were not customer friendly. And see, if company is not customer friendly and it is just doing the mixing, then what will happen? It will not survive the time, sir. Therefore, if you are doing the evaluation, ESG report may not be available, sir. But availability or non-availability of report will never stop you to apply the discount factor if you find anything fishy. If you feel that yes, effluent is being just eye-washed by the company, then what will you do, sir? Company may not have ESG report, but environmental data is available. And if environment data is available, then on the scale of 10, because see, presently, not much information is available. And I am also like you, I also do the evaluations for the small companies. But see, developing a scale of 10 where 3 for E, 3 for S, and 4 for governance. If you say apply these 3 parameters and you apply them weights and then you come out at 7, then you can always use the discount factor, which is 3. And see, if you come out with where these the things are only 3 compliant and 7 non-compliant, then you can use the discount factor of 7 so that you have the justification for your discount factor because you have assessed on the scale of 10 and whatever is the casualty that can be taken as a factor for the discount, sir.
Yes, sir.
Till,
So I have one.
till more information comes, this can happen. Yes, Chandrasekhar ji, feel free to
I
add
have one
some.
I have one request. I think
Yes.
in the glossary, I'm going through amendment. There are 41 definitions are there.
Yes.
If time permit, at the end, 10 minutes, can you just look at it, just recollect, I'll share that down, PDF. Can you just recollect and say one word on each definition, if time permits, sir. You decide, sir.
Why not? Time will permit, sir. Don't worry.
Yeah. 41 definition
Time will
because
permit, time will permit, and we will go through that, and we will go through the comparative statement which has been prepared by IVS rather than going for the PDF. Na?
that may
IVS which
better.
has prepared, we will go for that authentic document
Sure,
so that
sure,
it is for all of us and we all can understand the things.
sure, sir.
And time will permit, don't worry. Right, sir. Let us go to this because this ESG will be talked lot by every valuer. But see, as of now, how initially we have started the journey. We have started the journey with the parameter of 10. where we are taking the informations and whatever is the casualty, on the basis of that, we are using the discount factor and connecting this discount factor with this scale of 10. If 7 defaults are there, then we use 7% discount for ESG considerations. If 3 defaults are there, we use 3 as a discount factor for this ESG. This is how it is happening presently, sir, and we will improve. We will continue to improve by way of mutual learning from each other, sir.
Thank you, sir.
Then boss, actually I stopped here to take care of 3 things. Number one is valuation process review. Valuation process review, this is first. Second is value review. Third is valuation review. And this third one, valuation review, comprises both. This valuation review may comprise both valuation process review as well as value review. So that way, let us understand this, that this term value review is related to review of the value which has been arrived by our valuer. Process review may not include the value review, that includes only the process, whether process has been followed or not. Usually your RVO might have asked some valuation reports from you. And if they have asked, they have gone for process review. They have not gone for value review. They have gone for process review to see whether you are following the process or not. Rajeshwarji, my RVO asked me in 2019 to provide 2 valuation reports. And then they commented on the process which I am following. Did it happen with you also?
No, sir.
Okay, so you are lucky
Yes, sir.
that they have not asked. But my RVO asked me initially for 2 reports, and then they made me the reviewer.
Interested
For-
party.
no, then later on, sir. Later on in subsequent years, they made me the reviewer
Yes, sir.
for the process review.
Yes, sir.
Yes. Next one. Yes. Next one, valuation review we have done. Value review we have done. Now see what has been deleted. Financial instrument, the definition of financial instrument has been deleted. This may be interesting for each one to note that the definition has been deleted, financial instrument, because it is not easy to and they said that because there is a separate asset standard, so therefore there is no need of this definition. Financial liability or liabilities, this has also been deleted. Fair market value has also been deleted. And many of us know that this NAV and FMV. So then this fair market value deletion has happened for this fair. And another important deletion is that the word may has been deleted. Means whatever is mentioned, whether it is glossary, whether it is general standards, whether it is appendix, whether it is asset standard, the may has been removed. If may has been removed means shall or might continue. That means that now we need to mandatorily follow whatever is mentioned in there in those things. Appendices, now see IVS 104 include this important appendix, data and inputs. Then you need to take inputs for the ESG also, because this is the appendix of the IVS 104, which is known with the name data and inputs. And well, now here we will go for this file, which was being talked about by Chandrasekhar. First of all, we will go with the file, and welcome to Mr. K. Sridhar also. And First of all, I will share the file which is prepared by the IVS itself. And click to exit. First of all, click to exit. Okay, fine. And save. And now the different file. I am sharing the file for the comparatives so that we know. And then we will share the PPT which has been prepared by Mr. Chandrasekhar.
So I'm not prepared, sir. You are with the.
Okay, okay. I will.
Yeah,
Don't
Ajay
worry.
sir.
Yes, don't worry.
Also, sir, what is the impact of a finance? You said I'm not aware. Finance management deleted. Deletion also, I think if you can just throw light, what is the impact?
No,
Normally
no
we go
impact,
for
sir.
no impact.
No
It will be just
impact, sir.
clarified.
Yeah,
Sir,
no impact.
Sir,
No
what
impact.
many banks, banks ask it while for valuation, they specifically ask to mention the fair market value.
Yes.
So, then if this definition is removed, then what is its impact?
No impact, sir. Because
we
see,
have to follow IVS.
fair market value is basically nothing. First of all, let us go through the file which is regarding this and prepared by. Now see red line addition. This is known as red line addition. Let me expand it so that. Now see this, what this red line expanded, this says that yes, whatever is mentioned in red, that has changed. And see, this is forward after this glossary. Glossary is basically nothing but definitions. General standards now increasing to 7. Asset standards, you can see that these 4 plus 1, 5 are dedicated to SFA, 2 dedicated to land and building, and 1 dedicated to the plant and machinery. Then plant and machinery, rare professionals, but today at least 1 is available over there, and he will be writing his number so that whenever you need the plant and machinery colleague, you can have him.
Sir, I think there are more numbers are there. Land and pandemic today is a common for all. Yes, sir.
Okay, fine. Perfect. Now see, we are focusing on glossary. And in this glossary, you will find that defined terms earlier were coined with series 20. Now they are termed with series 10. And in this series 10, you will find that earlier definition of asset. Now see, this asset definition was 4.5 lines. Now this is becoming half line only. Right to an economic benefit. And earlier it talks about many things referred generally to items that might be subject to valuation engagement unless otherwise specified, can be considered group of assets, liabilities, etc. etc. Automated valuation model, you will find that yes, this is new addition and this new definition has been inserted over there. As I
Sir,
told
what is
you
that?
that.
Sir, red deletion is a deletion. Red without deletion, the automated valuation process. This is addition, no, sir?
Yes, see, blue means continuation.
Okay, continuation.
And red means 2 things. If it is deleted, then strike off, you will find the strike off line.
Otherwise,
If it is
addition.
mentioned without strike off, then it is new insertion.
New insertion.
Yes.
Blue means
Automatic
existing addition.
Yes.
Garji, a PDF of this is available publicly or?
Yes. This is available, boss. Sanjay ji, this is available, and if BVA members need it, then I will share.
I mean, we'll be grateful if you can share it.
Yeah.
Come.
Will happen.
Vijay can
Everybody need of it, sir.
This will happen, sir.
All will need of it.
Now see the basis of value, fundamental premises on which the reported values are or will be based. That is the basis of the value. Fundamental premises. See, 2 premises, if you remember, then Sanjay ji, in valuation, we have only two premises usually.
Mhm.
And let us recall those two premises. One is that business will run continuously and will not end. And if business has stopped, then insolvency commencement date or whatever, or liquidation value.
Liquidation of, yeah.
Yeah. So
We
that
can-
way, and now see the definition of client. Earlier it was there, and now what is happening that the gates are getting opened. The definition of cost, this has not changed, sir. The definition of data is this new addition. You will find not only quantitative but qualitative information is also entering into the definition of data. Otherwise, when we talk about the stats, so then situation may be still bit different, but this is the for the valuers. Discount rate survived, equitable value survived, fair market value. Now see fair market value deleted. That nothing, because otherwise also it was only the referred thing. Because it was referred thing and now it has been deleted. And see the input. You will find that input includes not only data but assumptions and adjustments also.
Sir,
Assumptions and adjustments.
Ajay sir,
Sir,
Yes.
sir, may
and
I?
each definition, can we spend some half a minute or something like that? So just we'll go through so that members will is an opportunity to recollect for all of us.
Yes, possible. Why not? This is possible. Then let us
Sir,
devote.
against FMB, what has been introduced, if I may ask?
Rajiv sir, yes. Repeat your question, sir.
If as against FMB, what has been introduced, sir?
Please repeat. Rajiv sir, please repeat your question.
Sir, as earlier we used to. Am I not audible, sir?
Sir, voice is breaking in between. So then repeat your question or write your question in the chat box, sir.
Sir, what he is asking is in place of FME, what is there now?
The earlier also FMV was only referral definition. And as suggested by Chandrasekhar ji, we will devote half minute to every definition so that it is clear. And let us devote half minute to every definition. And let us start from 10.01 again. Well, first is asset or assets. This has been redefined, right to an economic benefit. Second is 10.02. This is automated valuation model. And you will realize that this automated valuation model, as you were getting the calls from the software people, that software is ready and you will get the report within minutes, within seconds. So these automated valuation models take care of all these softwares. Basis of value, fundamental premises on which
Sir,
reported values.
Sir, in the automated evaluation model,
Yes.
this is definition understood. Automation evaluation model means any process which is having an output with a desired input with a mechanical process or inbuilt formulas.
Yes.
Now, SF evaluation, which I am know, normally is it mandatory to AVM model or in the sense, is it mandatory? Just I want to know, sir. Or either people
It is
can have
not
manual
mandatory.
method. Okay,
It
got
is
it.
not mandatory, but if you are using automated valuation model, you need to disclose.
Yes, sir. Yes,
Means disclosure is mandation,
yes,
but
sir.
it is not mandatory to use automated valuation model. Now see, basis of value, as just now Sanjay ji was talking about the liquidation value and continuing business value. So the basic premises. And now see the definition of the client. The definition of client, where internal or external. Now two words have very much clarity that yes, internal and external, and there may be a possibility where in times to come, valuation may be performed for an employer. Because if CFO can do the justice, if company secretary can do the justice while being in position and while being in employment, then why not valuer? And there are certain companies where valuation is regular thing. So therefore, I see this as a good development where young valuers, if they will seek the opportunity for the employment in times to come, maybe 3 years down the line, I foresee that this will happen. And the gateways for the employment for the valuers will also open. The definition of cost 10.05, this has survived. Consideration or expenditure required to acquire or create an asset. Now see this costs definition, the generally what we understand, it is different and it is in relation to the asset. So basically when you are doing the intangible valuation for the intangible asset, then you may need this definition to recall. Data, you will find that not only quantitative but qualitative information has also been codified with the data. Discount rate, this has survived. ESG, this is new development, new entry into the definition, environment, social and governance, which we have talked. 10.09, you will find that yes, this 10.09, that is related to equitable value. This is estimated price for the transfer of an asset or liability between identified knowledgeable and willing parties. And this definition has also survived. The fair market value has been deleted completely. And you will see that here, basically this was not the definition. It was only the reference which was given over there.
Sir, even fair values are deleted, sir.
Yes, yes.
So then when we give the valuation, do you have to say
Yes.
fair value per
Yes.
share?
Yes.
How do we say fair? Earlier we used to say the price. We used to say that this is the price.
See,
Price.
Chandrasekhar, the only thing that definition has been removed. They are not saying that you will not mention fair, that this is not fair value, or you need not mention unfair value. Only thing is that definition has been removed. That means now you are free to define yourself.
And maybe do you have to import from the India's 103, sir, where they mentioned as an fair
Yes.
value?
Yes, yes.
Okay.
And see the input and compare this input with the data. In data, it was mentioned, I am going back to data, qualitative and quantitative information. Whereas input is broader term where data plus assumptions and adjustments. All three have been taken. Now see intangible assets. This definition has entered for the first time an identifiable non-monetary asset with no physical substance. An identifiable non-monetary asset with no physical substance. This is the definition of intangible asset. Means till now, we were talking only about the physical substance in case of intangible assets, but here this non-monetary asset, new terminology has entered and this shall be identified. Now see 10.12 that.
What is the significance of the word identifiable here?
Yes, this is what we will be deliberating and discussing in multiple sessions. And see identifiable because see when we were reading about the intangible assets, Sanjay ji, because see if you remove S and N from your name, then my name will become. So then my name is hidden in your name. So then see when we were talking, when we were reading about this and as a student of RV, then what was it? That intangible asset as a professional, what we understand that there is no physical substance. But then we read that intangible assets can be of two types. One which are registered, means patented, trademark or whatever, or having the IPR. And there may be some intangible assets where IPR is not there, but still they are intangible assets. For example, the HR team which you have, or the employees which you have, or the committed customer which you have, which are regularly revisiting your business. That is your non-monetary asset. But it is identifiable. If customers are identifiable and they are revisiting, then you can say that yes, this is your intangible asset and you can do the value of that. So basically, for the purpose of valuation, when you are going to value the intangible assets, what is intangible or what is not, this definition will help you, sir. Now 10.12. you will see that 10.12, the complete overhaul has happened here in case of intended use. Reason for which a value is developed as described in the scope of work. This is also known as intended purpose. So this definition has completely overhauled. Now see this definition of intended user. You will see that this definition has also substantially changed. Party identified by the client and valuer in the scope of work as users of the valuation, that will be known as intended user. Means jointly who is identifying? Not only the valuer, but client and valuer both in the scope of work are identifying it as an intended user. And see,
Sir, 1 minute. Sir, on this intended use, I think it has got a very important significance about the scope of work. In the scope of
yeah,
work, it has to be very purposely mentioned what is intended use of the valuation report purpose, whether is it for issue of shares or for buyback or reduction for capital, amalgamation,
yes,
sale, liquidation. Because it says
yes,
that intended use of the report is the reason for which value is developed, described in the scope
yes,
of the work.
yes,
So I think that has to be very clearly mentioned. Otherwise, if the asset is for a liquidation value, then they can't use it for an issue of shares.
yes. Tomorrow when your session is there, na, then focus on valuation framework, which is IVS 100. In
Yes, sir.
IVS 100, you will find that terms intended use, intended user, this and that, all these
Yes,
are mentioned over there. And
yes,
take care of that very carefully so that
yes,
you understand how scope of work need to be defined. And these terms must be there when you are defining the scope of for your valuation.
yes, sir.
Similarly, the intended user, earlier the intended user we used to write whatever, but now it says that party identified by the client and valuer in the scope of work. So that way, but investment value has survived. Not much change is there, only some symptomatic changes are there. Now see jurisdiction. Jurisdiction, and you will find that this has also now changed. The legal and regulatory environment in which valuation is performed means substantial change in the definition of jurisdiction is now coming, because see these international valuation standards are applicable and adopted by 124 plus nations. But here, therefore, what has happened that now the legal and regulatory environment in which a valuation is performed, that is mentioned here. So then this definition has also substantially changed. This liability has new entrant in the definition. Liability. The present obligation to transfer an economic benefit. A liability has two following characteristics, two essential characteristics. It is a present obligation. The obligation requires an entity to transfer or otherwise provide economic benefits to others. So here, see why there was need to mention this liability, because earlier the definition asset includes that asset also includes liability. It's negative asset. But now what is happening that the definition of asset has changed, and now that asset also includes liability, that definition has changed. Therefore, this liability has now entered separately as a definition. Earlier it was asset which includes the liability in the definition of asset. And see now liquidation value. Liquidation value, you will see that yes, it is also substantially changing from a liquidation sale with the seller being compelled to sell as of a specific date. And liquidation value can be determined in two different premises of the value.
Sir, there is a one question from the participant.
Yes. Yes.
Sir, if the definition of a fair value and fair market value is now removed, then
Yes.
should they be mentioned in the valuation report? Is a question.
Yes, why not? See, removal of the definition nowhere says that now you shall not mention the word fair market value. Only thing is you will see the definition of fair market value that earlier also this was referred. This was not defined in IVS. It was referred with OECD and it was referred with one another entity. Now they say because these are referral value, therefore we are not going to define it again. And
Okay.
the reference can be withdrawn from the regulator or the legal things or statutory things or whatever. Because fair market value in various nations is differently defined. Therefore, they have stepped away from this definition.
Thank you, sir.
Ram Krishna ji, thank you for asking the question. And now let us move further. Market value has survived, no change. The word may has been completely deleted. Means everything is now must. And the definition of must has also changed. And it has now got simplified actions or procedures that are mandatory. But that's it. Observable data, this is new definition. Information that is readily available. You cannot ignore that. If the data is readily available and you say, I don't want to use it, not. Price. This definition, only minor change. Purpose got deleted. Professional judgment included. We have discussed it. Professional judgment, use of accumulated knowledge and experience. And professional skepticism, when I read it for the first time, I felt happy that this negative word now getting positive meaning. That questioning mind and critical assessment. Service organization. Now see, this is the new definition in times to come. What will happen? You will see some of the data which is accumulated as a aggregator. For example, see, my social initiative, myvaluationbank.com, which is loved and referred by many of you, rather all of you. And that way, what is this now? This is now covered in the definition of service organization. An entity that provides information, reports, or opinions, including but not limited to providing market data, credit rating, or other services to support the evaluation. So that will now be considered as service organization. The word should, you will see that lot many changes have happened in this word should. Now see the new definition only simple. The valuer is expected to comply with requirements of this type unless the valuer can demonstrate that alternative actions are sufficient. Now see what is the sense and relevance of this. Read it in reference to statutory and legal requirements. If statutory and legal requirements are different, then IVS may be deviated. Otherwise, IVS must be complied. And whenever there are deviations, these deviations must be mentioned. It says that valuer can demonstrate that alternative actions are sufficient only then. And now see this significant.
Sir, this,
Here,
sir, on this should, can you go little, sir?
yes.
What is the impact of this? Is it been given more options to the valuer to use a different method because their earlier indicated responsibilities that are presumed to mandatory. Now, valuer is expected to comply with the requirement. It means that should meaning the impact has been deviated where valuer can use a different options. Is that impact, sir?
Yes, see, suppose let us talk about the listed companies. Okay.
Yes, sir.
And say the listed companies which are frequently traded. Because
Yes.
SEBI as a regulator provides you the mechanism and where they have used the word price instead of the value.
Yes,
So
sir.
then in that particular case, you are ignoring the income method, income approach, you are ignoring the asset approach, you are using only the market approach.
Yes, sir.
So then this should, the valuer is expected to comply with the requirement of this type unless the valuer can demonstrate. So then their valuer can demonstrate that regulator SEBI has prescribed that in case of frequently traded shares, I need to use only the market data. And I can ignore the income and asset approach. So that way, this should now in the new definition in new avatar has to be used, but valuer need to demonstrate, valuer need to re-mention the provisions of the SEBI in his report. Or at least give the reference with the hyperlink.
Then in the same way, coming to example for unlisted private limited company shares, if the
Yes.
private limited company can establish a EBITDA multiples of a listed company similar in size, so normally, since though their compensation shares are not quoted, using EBITDA multiple, can they go for a valuation that is also permitted, though is not listed, but is able to demonstrate EBITDA multiples of the competitor company in terms of size. So that's what. So he's getting a little more leeway to use the different methods, which is appropriate.
Right. I will give you more, I will give you the better answer. Say sometimes what happens when investment is made by third party, then at the time of investment agreement,
Yes, sir.
the valuation model is defined.
Yes, sir.
And there you cannot use the other valuation model. Whatever has been defined in the agreement, you need to follow that.
Yes,
So
sir. Yes, sir.
that way, what will happen? That departure will be there, that you
Yes,
will
sir.
not be following the IVS fully. But
Yes,
you
sir.
can always mention that there is agreement between the investor and the company, because there is an agreement and it is mentioned in clause number 2020 of this agreement, and therefore I have followed that and I have ignored income and asset approach, because they say
Okay.
that the valuation shall be linked only with the turnover of the company or
So it is
whatever.
very, so it is very important. I think we are
Yes.
valuer, no?
Yes,
Normally
yes.
we follow investor. The company will come. No, sir, this is my method. This is my SHA. Agreed with the investor. I wanted the these are the principles to follow. We agree, but since we are deviating from the purpose, we are, as you said rightly, we may have to mention saying that by virtue of the shareholder agreement by clause, I followed this method, so that user can understand that this is not an exactly free method. Method is adopted, which is agreed by the parties.
Yes, and there can be another situation also,
Sir,
Chandrasekhar ji.
may I on this point, sir?
Yes, sir.
Yes, Rajiv ji, yes, share your
Sir,
experience.
sir, under this 11 UA, etc., also, where it is given the assess based on the opinion of the assessee, etc. So, in case assessee is emphatic upon, okay, I want to go ahead with 11 UA only, and though the DCF value will be, let's say, 1,000 rupees as against the 11 UA method, which is giving, say, 500 rupee only. So what methodology should be opted for? Because
Yeah, you see,
then
because you are
in
right,
that
Rajiv
case,
ji.
transferer is emphasizing upon I will go by the 11 UA. That way, he is transferring it for 500 rupee, but 1,000 worth of asset. So rest differential will be treated
Sir,
as
agreed.
gift also, or will there be a change in methodology?
See, Rajiv ji, see, whenever the law, statutory requirement or regulatory requirements are there, or some agreement is there between, then it's okay. But if say client wants to dictate you the terms and he wants to say that then technically speaking, technically, I'm prefixing the word technically speaking, then you are not following IVS.
Sir, also I have one thing. Can I add, sir?
Yeah, yes.
Sir,
But
as a rule 11 UA,
is now cancelled, no?
No, 11
Rajesh,
UA is
as
not cancelled.
11 UA or whatever is concerned,
No,
that
no,
is the
no. No, sir. 11 UA
legal
is not
requirement.
cancelled. Section 56 7B is cancelled. Section 56 7 is cancelled. 11 UA is not cancelled. Nowhere it is written 11 UA is cancelled.
sir, can I?
Yes, yes.
Rule 11 UA has got subsection 1 and subsection 2. Subsection 1 is applicable for a method required for transfer of share, which is for a between transfer and transferee. 11 UA 2 is applicable for connected to 5627B, which is for issue of share that has been cancelled. I think
Yes.
that's okay. Second one is for
Perfect.
rule 11 UVA 1, if you're issuing evaluation report, we are not expected to follow IVS. There we are supposed to, because that is, see, rule 11 UVA, strictly speaking, is not a valuation report from the independent person. That is a valuation report method prescribed. So for that, we have valuation audited or a provisional FS. So it can be just only compiling the number. It need not be from IBV registered valuer. It can be from an independent person, or it can be from the management. Rule 11 UA 1 report is only just take net assets as per the financial statement and replace the market values. So I think that so
Yes, okay.
there.
Shekhar ji, let us now focus again on the definitions,
Yes, sir.
because few definitions is still left. That is synergistic value. Result of a combination of two or more assets or interest, where combined value is more than sum of the separate values, that is known as synergistic value. So then in highest and best use, we are always seeing that yes, combination always provides us the better value. So that way this synergistic value, this definition continues as it was, there is no change. Tangible assets as intangible assets have been defined separately. So therefore tangible has also creeped in as a new definition. And you will find that this tangible asset is new addition to this definition galore. Valuation, the art or process of the definition of valuation has also changed. And you will see that this definition has also basically the substantially changed. You can see the strike of line red and you can see some additions also over there, but overall not much change is there. Almost it remains same. Valuation approach and see generic term for use of cost, income and market approach. And then this has been deleted because now this approach is getting shifted to another IVS instead of IVS 105. Valuation date, the point in time to which valuation applies. So this was valuation date and signing of valuation report is different. Valuation method, within a valuation approach is a specific technique to conclude a value, minor change only. The purpose of valuation purpose, and it's in its place what has happened that this purpose has also got deleted, and this valuation purpose has also got deleted because it referred to something different. Valuation model and valuation process review. Here comes three important definitions. Valuation process review, this is new. Valuation review, this is new. And then this valuation risk, as we were discussing. And now this valuation reviewer, this has been deleted. And now see here the another important definition, which is of value. As I was talking that this has got substantial changes. Valuer's quantitative conclusion on the result of a valuation process that is fully compliant with requirement of IVS is the value. And valuer continues to be same. Value review. Now see this review, this is third important definition after valuation process review and valuation review. And weight, because we used to use the weights whenever more than two approaches are used, then this weight, the amount of reliance placed on particular indication of value in reaching to the conclusion of value. And reference has been, for example, has been deleted. This is basically all in the valuation. And now if you wish to focus on any particular definition, we can focus on that particular definition. Chandrasekhar ji,
Yes,
if
sir.
any
Sir,
particular
yeah.
definition.
Sir, last
Sir.
one, purpose
Sir,
is
I have a
deleted.
question. I have a
Yes.
question about weight.
Yes, sir.
Sir,
Where?
recently I have been doing valuation for BSNL. There they are mandatory asking me to do DCF method valuation, but DCF is not viable. So can I use the zero weight for DCF method?
See, the engagement letter which you have signed with your client, that will
Yes.
become important and basic document for that. And revisit the engagement letter. If engagement letter says that you need to do the valuation on the basis of DCF method, then see
Not only including DCF, all the three methods.
including DCF. So then
Ah.
see BSNL, Bharat Sanchar Nigam Limited. And
Correct. Land valuation
BSNL,
where BSNL is not, this DCF is not viable. So I wanted to use zero weight for DCF method, even though they come.
sir, don't do it, sir. Don't do it, sir. You will be in trouble. See what is happening that if I
No, they
forget the last,
want to put them in trouble.
because see, they have also now used 5G and their connection is being taken by the people, though there are surrenders in last 2 months. Therefore, you cannot ignore DCF. You cannot take it zero, sir, because
Sir,
company is still working.
Sir, can I add, sir?
Yes.
Sir, I don't know. I think my this one is the weights we use when probability of achieving. When any organization DCF cannot be
Right.
managed at zero, DCF would be minimum 40 to 50% because that is expected to make that sales. Then you will give some weightage. I think zero value may not be appropriate. Maybe others can add because this is very important.
Zero is basically if company has stopped working. So
Yeah,
then you
correct.
put a zero. Otherwise, if some earning is there, then zero cannot be taken. But it depends on, because it is sweet choice of the valuer. So then Rasik ji, feel free. You
No, I
can do
think
your thinking.
Ajay ji,
But
what maybe he can clarify. The thing he's
yes,
saying is I'll value it by the 3 methods or 4 methods. The DCF
yes,
method, whatever value is coming, I'll assign weight 0 to it, which means that he'll not
yes,
consider. And then arrive
yes,
at the total average. I don't know whether that is what the intention is.
yes, yes,
That
Sir,
is also
boss.
somebody,
welcome.
Any other definition after this weight?
sir, somebody is asking. I would love to add on the valuation and regulatory requirement. Pradeep Sithia, sir, I
Which one?
think. Sir, somebody put a question in the chat box. I would love to add on valuation under a regulatory requirement. Mr. Pradeep Setiaji, can you just clarify whether you want to add or you wanted an opinion from Ajay Garg, sir? Okay, I think looks maybe the. So next one is observed input given first priority.
Yes.
What is the exact, sir? Okay.
See, observable inputs. Basically, Shivanandi, observable inputs means the information which is available, easily available, that shall not be ignored. It is not first priority, but that information shall not be ignored by the valuer. For example, just now let us take this case of Mr. Mehta as he was talking about the Bharat Sanchar Nigam Limited. And if you will see the data of the migration from one platform to another platform by the mobile user, mobile telephony user, then you will find that yes, there were 2 months where the BSNL added the more number of the mobile user. So that way, because this is the data which is available, then he cannot ignore this data. Pradeep Sethia ji, I would like to add on valuation under regulatory requirement. So Pradeep ji, if you have any comment, feel free to make this comment. Pradeep Sethia ji, if you are asking me, then I will give my vision. Kindly clarify. Pradeep Sethia ji.
Sir, I think must be is in mute.
Okay.
Sir, I have one question.
Yes.
Again, before going to the question answer session, final
Yes.
point is nicely we heard all your presentation for last 2 hours. In view of these developments, all our valuation report issued after 31st January requires some modification. Standard report we cannot close. That is a conclusion, no? Report
Yes.
formatting.
Yes. Report formatting.
Yeah, sure.
Report procedure. Let us talk about report procedure. How it is impacting my report procedures, right?
Yes,
Valuation report procedure. Number one, that scope of work, which you call as engagement letter.
yes, sir.
Few changes are happening in engagement letter. Number two, my valuation report, few changes. Yes. What are the changes? Number one, ESG considerations. Now, a separate point. Whether data is available or not, whether you put only cosmetic thing or whatever, but at least this should be there. Next, the general standards. General standards complied. We mentioned the IVS complied. Then we need to mention two things. Number one, IVS compliance. Number one thing, what we need to mention, that we have complied with IVS 2025. Number one thing. Number two thing, that we have complied with, you usually mention the general standards. If you are in habit of mentioning the general standards, then mention IVS GS, mention 7. mention 7 instead of 5.
Pradeep
And
here.
do remember to mention the right name, correct name. Pradeep ji is here, sir. And let us go to Pradeep ji. Pradeep ji, you have put a question over there. And if you
No,
wish
no,
to add,
no, it's not about a question, sir. It's about a practical thing. Sorry, some function was going on in the society. So there
Right,
was
sir,
a
right.
lot of noise. So I was unable to hear you properly.
No issue, sir. I would like to add on valuation under regulatory requirement. So feel free to,
Yeah, since we were discussing that,
next 2
how we
minutes
are.
belong to you, sir. Over to you for 2 minutes, sir.
Yeah, so since we all were discussing that, there are certain scenarios or thing where, we are not required to compile with the IVS. So one of the case which currently I am handling is of stamp duty matter. So every time there is merger, demerger or a corporate restructuring happening. So there is one thing that once the NCLT has given the order, then we need to go to stamp duty of that respective state. And in the stamp duty authority, or you can say, they have started one practice whereby for each and every transaction, they are asking NAV, net asset value of that company. Mandatory. In Mumbai, it is happening, that I know.
Okay.
So in that cases, we are specifically required to give only NAV. Even if it's an operating company, we can't use DCF method.
You are right, sir. And because this is regulatory requirement, basically, I will say because stamp duty collector is regulator. So therefore, he is giving you the directions, then you can always deviate from the IVS.
Yeah.
So just to add that, you mentioned the purpose. Is it for what purpose? For stamp duty discharge purpose. And I think if you can, your purpose should be very clear.
Yes.
Sir, purpose is basically what is happening. So just to give you a scenario background, suppose company A is merging with company B. Now, the stamp duty officer needs to adjudicate stamp duty on the NCLT order.
Correct.
Under Article 25D of Bombay Stamp Act.
Okay.
For that purpose, they are asking what is the value that the transferee company is bringing from the transferor company. We would like to know what is the net asset value specifically.
You are lucky, sir, because then you need to pay the less stamp duty. Because
but still they are asking, sir.
Yeah.
Sir, what we'll do, we can discuss offline. Actually, that is okay. I know practical challenges, but today's session is IVS, which is applicable generally wherever the reports are issued for an which is required to comply.
No, I am just saying, sir.
Yeah, sure, you can add it. I know, but what you're saying is IVS you are saying IVS compliance mandatory or not? In your case, is not mandatory because you're issuing a report with a specific regulator with a specific purpose. So not mandatory. Yes, sir. Thank you, sir.
Thank you, Ajay, sir.
You.
Sir,
question answer session.
Sir, I think sir has completed nicely entire presentation with the definition. I request we have sir 65 participants online for last 2 hours, and request participants if there are any questions. We have got another 5 to 6 minutes. We can make use of this interactive session, which all members can benefit. Any questions, sir?
Yeah, I just have a very small question. When we describe this compliance with the IVS, do we say IVS 2024 because it's issued in 2024 or that IVS effective 2025?
IVS 2025, sir.
Okay. Thanks.
Sir, any other questions? We can.
So in the report, Ajay, in the report, we start with what is the purpose of the valuation, correct? And here we are removing that definition itself of the purpose of valuation from the glossary terms. So, but still we have to cite what is the purpose of the valuation. Like we
yes, only definition has been removed, nothing else.
So it really doesn't matter. Like fair market value definition has been removed, but still we have got to reflect that in our reports.
Yes.
Thank you.
Because see, fair market value you get under market approach, and as the market approach is different, then and there are 2 other approaches also. So therefore, just only definition has been removed. They nowhere say that you need not calculate the fair market value.
One question is there.
Yes, sir.
Sir, I am audible.
Yes.
Sir, in the definition section, what is the difference between this valuation method and valuation model?
Yes. See, valuation method is basically restricted to particular method under the approach.
Yeah.
Whereas valuation model is wider term, where you can use more than one approach, where you can use more than one method. So therefore, that way, sir.
Okay. It means you want to say model means the combination of the multiple methods.
Yes, sir. Yes, sir.
And multiple method and approaches.
Yes, sir.
Okay, sir. Thank you.
So I think if there are no questions, I request Mr. Venkat Subbarao just to take over and convey a vote of thanks to us, sir.
Ajay Subbarao is there.
Yes, sir. He is always there.
Yes, sir.
Yes.
Thank you, sir. Thank you, Chandrasekhar.
Yes, sir.
Yeah, thank you very much, sir. I take this opportunity to thank you for taking excellent session on IVS valuation standards. Okay, like where we were thinking to conduct as early as possible, and because we are coordinating all these speakers dates. And thank you very much, sir, for sparing 2 hours and discussing on each everything, every word like may, should, and significant, and also where which you have covered like general standards and asset standards, and also where you have also covered what is the procedure and what is update we have to do in the valuation report. Thank you once again, sir, for your valuable information and contribution for this IVS standards.
And Subbarao, we are concluding on time. So that
Yes,
is
yes, sir.
one of the beauties, sir.
Yeah, and also thank you for all participants, for active participant, and Chandrasekhar, thank you very much for bringing more points and taking questions from the chart and again discussing throughout discussion. And also I request all members, we have tomorrow also one more session 6 p.m. From Mr. Gopal Krishna Raju. I request everyone to attend that also to discuss more on this international valuation standard. And also we are now reaching 31st March 25, and membership it is required to be renewed. I request everyone to renew for next year 25-26. You will get early board offer, and it is only 2,000 rupees. Again, otherwise we have to pay more than 20%.
Excuse me, sir.
Yes, sir.
The CEP points will be given by IOV only, no?
Yes, sir. IOV only will give this, sir.
Since I am having some shortage, that's why I'm asking.
Yes. And it's mandatory, sir, for all 3 days only. Then they will only get the CEP hours.
Okay, sir. No problem.
Yeah.
Sir, every
Thank you,
participant,
sir.
Okay, sir. Thank you, sir.
Letters will be issued, sir.
Sorry?
All the participants, letters will be issued, na, sir?
Yes, sir. Letters will issue, sir. Yes, we'll send the letter. Sir, this is the memento from Bank of Bangor Associate, sir. We will send it to you by courier. Thank you very much, sir.
Thank you. Thank you.
Thank you, everyone. Good night.
Thank you.
Thank you.
Sir. I think, sir, 4 days we have to attend, and then we'll get 6 hours CEP credit. That is what is my understanding.
3 days, Kusum.
Okay.
So activity mention up to 28, no, sir?
Yes. After 3 days, we will send it, certificate.
So 24, 25, 26.
Yes.
Yeah, sure. Thank you,
For
sir.
land
Thank
and
you.
building and SFA category, the dates of attendance is different. The third
Yes,
day is
correct.
different.
So, Subbaram, as Shilpa saying, 1, 2 mandatory for all, third only for SFA, fourth day land and plant and machinery.
Yes.
So, land building, sir, I have to attend the 4th day.
Your land and building, plant and machinery, or SFA?
Land and building.
Sir, you need to attend tomorrow and fourth day. Third day is not mandatory for you because you are not SFA. 3 sessions are mandatory, sir.
Sir, anyhow, Chandrasekhar, we request all members to participate. Anyhow, we are discussing general things. Okay, we are not going to for any technical things. It is better to attend all the sessions, everyone.
Yes, sir.
For the knowledge sake.
Yeah, for knowledge sake. Sure. Thank
I
you.
think
Thank you, sir.
Thank you very much.
Thank you.
Thank you, sir. Thanks for the clarification.
Vijay will log out.
Vijay, can you end the session?
Ivan, हो गया.